Thanks for tuning into the Trade Setup with me, Niraj Shah. A big thank you to all of you who watched us yesterday on the budget day. I'm told on a bunch of digital media handles and digital platforms, including YouTube, during the budget speech and afterwards, we were the most viewed platform. So big thank you. And a big thank you to all of you who tune in every day on this Trade Setup as well. As I've said, please in the comment section, lay out what you would want to hear on this and we'll try and see if we can include that. Okay, let's start off with the global news flow first. Nasdaq futures have fallen after Alphabet and Tesla report earnings which were weak. Remember, Tesla shares declined over 6% on weaker than expected results. Fourth consecutive quarter of a miss. Elon Musk is asking for patience, but I think that patience of the investors must be wearing thin. What else? LVMH growth has slowed as China's slump weighs in on luxury spending, and this should probably be true for a clutch of other brands as well. So that's to be watched out for people who have these luxury shares in their portfolio globally. Asian stocks are in a tight range after the big tech results and the Nasdaq performance. So what did US do? A bit of a drop. Dow futures about, 0.16% in the red. Asia, I wouldn't call it a mixed bag. In fact, across the board, there is a tick of red. Our markets, 68 points in the red, and this shouldn't surprise too many people as well. Frankly, let's get the trade setup up on the screen. And frankly, my view is that there are very limited triggers for upside, but for one thing, which is the liquidity cushion. Now, why do I say this? I mean, the budget needed to deliver a positive surprise. Has it? I would reckon the answer is a no from a market's perspective. The fiscal deficit number is great, but the capital gains tax is a bit of a soaring piece, and therefore there is no big positive trigger. It will be dependent on earnings, it will be dependent on liquidity, and I think the liquidity is strong. I mean, in some sense, the market yesterday showed that it is not ready to go down. We saw the similar thing post on the election day, as well, that there's an immediate bounce back. This market is telling you something that it is not ready to go down and behave the way most people who got a lot of experience would think the market would behave. I think that's the key point. And therefore, look at it sectorally, don't look at it from a Nifty perspective. It's become nearly impossible to predict the Nifty. I personally thought that the market should correct or would correct and should correct, but I'll tell you, I might be wrong as well. On the index, most people are wrong most of the times, I feel. Industrials may be impacted due to steep valuations. Remember, that bucket, a lot of people are saying, a lot of notes are saying, surprising I think, that why wasn't there an increase in capex, and therefore does that mean that the industrial stocks which relate to capex might come in for a bit of a rude shock? Maybe. I think the reason more is valuations as opposed to higher capex, because there are only 8 months left in the year. There is no reason for the government to up the capex amount. I think the economy can only absorb as much. So therefore, I think that number is okay. But because a lot of people have slightly turned negative, maybe sector rotation at play really, but I think industrials might be impacted. And again, sector rotation or otherwise, but I think the markets may now be constructive on staples and defensives in a big way, because there is one, the natural sectoral rotation, two, the budget has something for staples. I mean, the fact that there is job creation focus, and if there is job creation focus, more disposable income, maybe there's focus towards this whole GST reorganization, which may at some point of time impact the staples thing as well. So watch out for staples, and FMCG could be an interesting play. Very quickly, moving on to stocks that should be in focus today. I'll start off with Bajaj Finance. The numbers came out post the market hours yesterday, and I think both the brokerage notes that I'm bringing say the same thing: credit costs. This is a Morgan Stanley view. They are saying that the net credit costs at higher end of guidance with higher gross credit costs indicate, is a negative. There are indications that there are better collections in June and July for Bajaj Finance. I'll just take that note out myself, right? And they expect the stock performance to be muted in the near term and improve only in the second half as earnings growth inflects and asset quality improves. They are constructive on Bajaj Finance, by the way. They target prices around 9,000. Jefferies was lowered the target price from 9,260 to 7,780. They say that business or the results missed estimates. Sharp rise in credit costs was the key drag. So again, both brokerages saying that credit cost was an issue for Bajaj Finance. AUM growth healthy but weaker asset quality. And the weak asset quality and the fall in NIMs may lead to slower growth in future. Watch out for Bajaj Finance, might see a bit of a downtick today. HUL almost in line on all counts. No surprise there, but staples are in a positive mood. Maybe HUL does okay, but really no results reason or commentary reason for HUL to do well. Bear that in mind. ICICI Securities though had a really strong show. So ISEC will come up on your screen next. Total income up 76%. PAT up 94%. And the growth was seen both in broking income and investment banking segment as well. Second quarter in a row when ISEC has done well. Not necessarily react too strongly, but good results for sure. The others, which were largely in line, were Thyrocare, Torrent Pharma, and Schaeffler India. Exactly in line with estimates, no changes whatsoever. Watch for these. Bajaj Projects, the company backed 568 crore order from Power Grid Corporation. Remember the 3,000 crore company backing a 568 crore order, so should be construed positively. There is a Jefferies note on ITC, so do watch out for that one. Could be interesting to watch in the session today. Upgraded to a buy, target price at 585. This is only up 6.5% already. They're saying no bad news is great news. Effectively, it's a clear winner with the government leaving tobacco taxes unchanged. The big fear hasn't happened. GST taxes may stay stable until March 2026, according to Jefferies as well. So that is also positive. And the demand outlook for staple sector is improving, according to Jefferies, which also augurs very well for ITC. So watch out for this one as well. There is a small update on Tata Consumer. Remember, there's a fundraise announced for 2,998 crore rupees. The rights price is at 818, which is a 35% discount to the current market price. 26 shares will get one rights share. Effectively, what would existing or the old investors do? They'll consider selling the RE when they get credited as well. There is no trading opportunity though for Tata Consumer, so bear that in mind. There's a lot of news flow around this, a lot of talk around it, but there isn't any trading opportunity, so please keep that at the back of your mind. Packed day today on NDTV Profit, a clutch of very eminent experts joining in. There is Mark Matthews, there is Ritam Desai, Niraj Shah of Envision Capital, Sameer Arora, Nilkan Mishra later on in the day, S. Narain at 10:30. So it's a packed day. You don't want to miss the conversations. Thanks so much for tuning into the Trade Setup today.